You've listed your home for sale and now you're waiting for the offers to roll in. At this point, you may be asking yourself, what makes a good offer and how do I know that I'm selecting the best offer for my home? I'm Staci Russell, your local Northwest Houston Realtor, educating buyers, sellers, and investors on all things real estate. And in today's video, we're going to take a look at all of the negotiables that are in the TREC 1-4 Family Residential Contract. Understanding these negotiables will help you better understand what an offer needs to look like in order to satisfy your particular needs. When I work with my clients, I want them to know exactly what a contract looks like and what offers are going to be most beneficial for them before the home is listed on the market. I want them to be 100% confident on what they should be looking for when offers start rolling in. So let's get into some of the negotiables in the TREC 1-4 Family Residential Contract that may be important to you as a seller. The very first negotiable is going to be sales price. The seller is always in charge of what they would like to list their property for. An agent's job is to help educate the seller on comparable properties that have sold recently in the area, to be able to help a seller understand what homes are selling for. And sellers that work with their agent in determining that list price are typically going to see offers at list price or possibly over list price. However, it's really important to remember that sales price is only one of the many factors and negotiables in this contract. So just because you receive an offer for at list price or over does not mean that it's going to be the best offer or make you the most amount of money. The next negotiable that you're going to want to look at is selecting a buyer with strong financing. Buyers who are serious about purchasing a property are already going to have a pre-approval letter from a lender, or cash buyers are going to be using proof of funds. It's important for the buyer to have strong financing so that the deal doesn't fall apart. In this market specifically, where interest rates are continuing to increase, it is extremely possible for financing to fall through for a buyer. And if that happens, you're gonna feel like you're back at square one and having to start all the way over again. A good agent will actually reach out to the buyer's lender and verify the strength of the buyer. The next thing that you're gonna wanna look at is the earnest money and the termination option, also known as the option period. Earnest money is typically 1% of the sales price, but buyers can actually offer more in order to knock out competition and to show the sellers how serious they are about purchasing that property. Now, earnest money does get credited back to the buyer at closing so that they can use that as part of their down payment. But the amount of earnest money being negotiable and being able to offer more is a really great way for buyers to get their offer accepted. The termination period, or the option period, is a fee that is paid to the sellers as a courtesy for the sellers taking the home off the market while the buyers perform inspections and do their due diligence. Buyers will pay an option fee for a specific number of days, and within those number of days, the buyer actually has the unrestricted right to terminate, but also negotiate repairs or concessions. In this particular market, we're seeing option periods anywhere from 7 to 10 days. However, this is a negotiable, so you can actually make that longer or you can make it shorter. Ideally, a seller is looking for a shorter option period. The next negotiable in the contract that you want to look for is the title policy and the survey. A title policy is basically insurance that all previous homeowners have paid off all liens, HOA fees, taxes, assessments, etc., to ensure that when you purchase the property, the title is free and clear. And the contract will specify who will pay for the title policy. It can either be the seller or the buyer, or this cost could actually be split between both parties. The title policy can also insure the survey. If a new survey needs to be purchased, the buyer or seller could also incur that cost. Our next negotiable is property condition, and buyers have two options on accepting property condition. They can either accept the property as is, or they can accept the property as is provided that the seller, at the seller's expense, will complete specific repairs and treatments. Most of the time, the buyer will select the first box as is for the general offer. Once an offer is accepted and executed by both parties, then during the option period, the buyer will typically get an inspection and then use the inspection report to figure out what they would like to negotiate on, and they will submit something called an amendment. An amendment is a change to the contract. So if they would like to move forward with purchasing the home, the buyer may submit an amendment to change the sales price, to ask the seller for concessions, or to ask the seller for repairs. The next negotiable is completely optional for the buyer, but it can impact the seller, and that is a residential service contract, also known as a home warranty. A buyer has the option to purchase a home warranty and can ask the seller to either pay for some or all of that first year of the residential service contract, Our next negotiable is closing and possession. The closing date is an on or before date. Most finance deals take about 30 days from written offer to close. However, every situation is different and closing may occur sooner or later. As far as possession goes, a buyer can take possession of their new home upon closing and funding, or according to a temporary residential lease. If you are a seller that needs to stay in your home after closing for a specific number of days or weeks, this may be a negotiable that could really help you out. It's something called a leaseback, which is essentially that the buyers, which are now the new owners, have closed and funded on your property, and now they are renting the property back to you. Sometimes they'll charge you for that, and sometimes it's absolutely free. I always just like for my clients to be upfront and honest so that when the buyer does submit an offer, they know exactly to ask for a leaseback. Our last negotiable in the contract is settlement and other expenses. These are expenses that are to be paid at or prior to closing. This paragraph allows sellers to pay a certain amount of money towards the buyer's expenses. These are expenses that are going to be prohibited by FHA loans, VA loans, Texas Veterans Land Board loans, or any other governmental loan program. I hope that this video gave you a little bit more confidence on understanding all of the negotiables in the TREC 1-4 family residential contract. Having knowledge on this contract and knowing what's important to you in an offer is going to help you select the best offer for your particular situation. And your agent will be there to guide you through every step of a real estate transaction. If you found this video helpful, don't forget to like, comment, and subscribe. And I would love to hear from you in the comments. So make sure that you comment below what city and state you're watching this video from and what is most important to you if you are currently a seller or when that time comes for you to sell that home. I hope you guys have a wonderful day, and I will see you next time.